Welcome back to the Community Corner podcast, where we explore companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Kimco Realty Corp, one of the largest publicly traded owners and operators of open-air shopping centers in North America. Kimco specializes in shopping centers anchored by grocery stores, which provide essential services to communities. We'll explore how behavioral finance influences their strategic decisions, DEI efforts, adaptation to market changes, and how they compare to other companies in the real estate investment trust rate sector. Let's dive in.
Kimco Realty has a significant presence in the retail real estate market, but from a behavioral finance perspective, how do biases like loss aversion and the status quo bias influence their decision-making, particularly in property acquisitions and portfolio management?
Loss aversion plays a significant role in Kimco's decision-making, especially in property acquisitions and portfolio management. This bias might lead the company to prioritize strategies that minimize potential financial losses, such as focusing on stable, income-generating properties like grocery-anchored shopping centers. While this conservative approach helps protect the company's assets and ensures steady income, it may also limit their ability to capitalize on high-risk, high-reward opportunities in emerging markets or non-traditional retail spaces. Status quo bias is another key factor where Kimco might be inclined to maintain their existing portfolio and investment strategies, even when market conditions suggest the need for diversification or innovation. This can lead to a focus on maintaining the status quo rather than exploring new avenues for growth.
This focus on stability and risk management has helped Kimco build a resilient portfolio, appealing to investors who prioritize consistent returns and low volatility in the retail real estate sector.
Exactly. Kimco's emphasis on stability and conservative investment strategies has made it a reliable choice for investors seeking steady income from real estate investments. However, the company must balance this with a willingness to explore new markets and investment opportunities to ensure long-term growth and competitiveness.
Let's discuss diversity, equity, and inclusion at Kimco Realty Corp. As a major player in the retail real estate market, how does DEI intersect with their business strategy, and what insights can we draw from behavioral finance?
DEI is particularly important for Kimco given their role in providing retail spaces that serve diverse communities across North America. From a behavioral finance perspective, embracing DEI can enhance decision-making by incorporating a variety of perspectives, which is essential for understanding and meeting the needs of different communities. A diverse workforce can help Kimco develop more inclusive and effective leasing strategies, ensuring that their shopping centers cater to a broad range of tenants and customers. For investors, the company's commitment to DEI can signal a forward-thinking and socially responsible organization, which is increasingly valued in today's market. Additionally, strong DEI practices can improve employee satisfaction and retention, which are critical for maintaining operational excellence and driving long-term growth.
Investors are increasingly considering DEI as a critical factor, especially in industries like real estate, where understanding and addressing diverse community needs is key to success.
That's right. By embedding DEI into their corporate culture, Kimco not only strengthens its ability to serve a broad range of tenants and customers, but also enhances its reputation as a leader in providing inclusive and community-focused retail spaces. This focus on inclusivity can also help attract top talent, which is essential for driving innovation and maintaining a competitive edge in the industry.
Moving on to market adaptation, Kimco Realty operates in a dynamic and evolving retail real estate market. How does the company adapt to changing market conditions and consumer behaviors, and how does behavioral finance influence this strategy?
Kimco's ability to adapt to changing market conditions and consumer behaviors is crucial for maintaining its leadership position in the retail real estate sector. From a behavioral finance perspective, the company's strategy involves balancing the need for innovation with the risks associated with exploring new types of retail spaces or entering new markets. Loss aversion might make Kimco more inclined to focus on their established grocery-anchored centers, but they also recognize the importance of staying competitive in a market that is increasingly influenced by e-commerce and changing consumer preferences. This requires a careful assessment of market trends, tenant needs, and consumer behaviors to ensure that their strategies are both effective and sustainable.
This adaptability is key for Kimco, especially as they face competition from both traditional retail centers and newer, more flexible retail models. Their ability to innovate while maintaining stability is essential for their continued success.
Exactly. Kimco's success will depend on their ability to balance innovation with the strength of their established properties, ensuring that they remain competitive while also maintaining the stability that their investors value. They must continue to evolve and adapt to meet the challenges and opportunities presented by changing market dynamics and consumer behaviors.
And unlike Simon Property Group or Federal Realty, which have a broader focus on premium or mixed-use properties, Kimco's strength lies in its ability to maintain a stable portfolio of grocery-anchored centers, which has allowed it to build a resilient business model.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value. For Kimco, the focus on stability and risk management provides a unique value proposition in the retail real estate sector.
To sum up, Kimco Realty Corp.'s approach to business is deeply influenced by behavioral finance principles, whether it's through their property management strategies, DEI initiatives, or market adaptation. But like all companies, they must navigate the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics offers a clearer picture of what drives Kimco's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.